Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, July 1st, 2022. I'm recording this on Saturday. So stocks are still in a downtrend, and we could see new lows soon. Sorry, I forgot to mention, please don't forget to hit the like button, subscribe to this channel, and share this video with others. High yield bonds are also approaching new 52-week lows. Because of the correlations, this could be very bad for stocks. Oil moved lower from recent 52-week highs, and I think we will see downside for oil before we see any bounce higher. We'll look at a trade that Warren Buffett is in right now for Occidental Petroleum. See if he is correct and do we agree. Natural gas also is in a downtrend despite all of the horror going on right now in Europe with Russian aggression against the Ukraine. And interest rates could still come down a little more, so that means less interest rate for mortgages, more affordable mortgages, but I think this is a very short-term kind of issue. Maybe weeks to months, but definitely an uptrend in yields and a downtrend in bonds. And cryptos, Bitcoin is again very close to new lows, and I think we can see Bitcoin 12,000 at least, possibly lower pretty soon. If you're a subscriber, then stay tuned. I have all of these stocks that we are trading. This week gold and gold miners are in a paid subscription only newsletter. So if you're not a subscriber, sign up by going to MasterChartsTrading.com and sign up for one of the products, including the trading indicators, newsletters, or both. So what are the trading indicators? On this chart you can see them. It's green, blue, red, and yellow line. What they do is they help me and people who use them kind of get a feeling of what it is that we're trading. Well, how do we want to trade it? So here's S&P 500 futures, and it's a daily chart. So daily means right there, daily means 1 day's worth of activity. Each candlestick is 1 day. We can, if people are freaked out by the candlesticks, I can make it a line. It actually makes very little difference. The important thing is at what price level do we want to buy, at what price do we want to sell. So for example here, the breakout originally occurred on the April 2020. That's 2 years ago, a little over 2 years ago. We had a couple of opportunities as late as May 2020, and then the stocks just took off. Notice that the price only came down towards the blue support resistance line right there in January of this year, and we had a couple more opportunities. Now if we look closer, we had what's called a entry into a bear market. So how do we define bear market for stocks? With my indicators, things are very easy. So for stocks, S&P 500 is a stock. Once we see a close below the yellow line where I'm hovering right now, so this happened on 29th of April. So at that point, this is I will consider it a bear market, meaning that we are now in a downtrend for stocks. And once the downtrend is in place, we want to be selling. We do not want to be buying. So selling has double meaning. You can say we want to sell on a bounce. So let's say we bought this security sometime in the past, and let's say we have a profit, but we want to just, kind of cut our, at least preserve our profits. So where do we want to sell? So usually what I say is we want to sell on a bounce. So we had an entry into a bear market in April, several new lows as late as May of this year, and then a bounce. And so I would sell on a bounce. But for traders who can trade, for example, options, or who can sell short outright, these are also great places to open new positions. So notice what happened here in May, June, beginning of June of this year, 2022. we had a couple of short signals, and the signal was we had a touch of the red support resistance line from below. Notice that we first entered the bear market, then we touched the red support resistance line from below, and then we closed again below it. So there are the two signals. So notice that I don't have the candlesticks on. I can turn them on, and you will see that those are actually very obvious places. So there's the candlestick. We had a high above the red line and a close below it. Same goes right there on the 3rd of June, the high above the red line and a close below it. So those are short signals. If you took those signals, congratulations, you have made nice profit. Over the past week or so, we had a bounce once again. So where did that bounce take us? So this is another line here. We can see this yellow line. So this yellow line is what I call, notice right there, weak resistance. So since the price is below this line, we need to get up above it, and it provides some resistance, but it's weak and it's quite often penetrated. It doesn't hold. The red line above is much stronger resistance, and this is exactly where we can make a stand. Okay, now we have a signal in March here, in May here, or in early June, but right this instant we do not have any signals. So let's say we sold short, we opened a short position, or we bought puts. We simply bought put options right here in June. Right here on 24th of June is where the price came up above the yellow line. So if it was below the yellow line, it made the low. So I mean, if you are lucky enough, you can catch this low on 17th of June. Congratulations. However, normally people have very difficult time catching the very bottom. So once it bounced, I would have taken some profits right there in June of this year, on 24th of June, and then I would have probably still have remainder of my position. So I would have probably sold around 25% here and kept the rest, because my stop is still at the red support resistance line. So this short is still technically open, and the way things are going, it just feels that we might make another low before we continue higher towards the red support resistance line. And one of the reasons is because of the junk debt, and I'll get to them in a few minutes. But just looking at this chart, it's not terribly bullish, to put it mildly. Very similar picture with Dow Jones. Dow Jones gave a few good short signals. Once again, we can get rid of the candlesticks if they make you uncomfortable, and simply look at the price. So once the red line is touched from below, we sell short. Once the red line is touched from below and then we close below this red line again, we sell short. So you can see them several opportunities here. Again, right this instant we can just keep the position open. I would have definitely taken profits and moved my stop to the red line at this point. So if my stop at the beginning of this trade was at the blue support resistance line, it's a short stop. So once we sell short, we need to know where we cry uncle, and we cry uncle at the blue support resistance line. But when our target is reached, we no longer have the stop up there. We moved it to entry, and then once the entry, or rather once the red line actually is below entry, as in this case, this happened like in 16-17 of June, we move our stop to the red line and continue holding until sometime in the future the red line is violated from below. So for Dow Jones, it's very similar picture to S&P 500. Here's NASDAQ. So NASDAQ, notice, didn't even reach the red line from below in June, and it collapsed. So it's extremely weak, if I can, there is no other description. And notice again, we're super close to new lows. So again, this is a good chance we'll make new lows before a sizable bounce towards the red support resistance line materializes. So still very much a downtrend. Notice excellent short signal right there on 8th of April. Once again, we can make it a line instead of the candlesticks if they confuse you, and there's the entry right there on 8th of April when the price came up above the red support resistance line and closed below it on the 8th of April. That's a signal to sell short. Looking at Russell 2000, this thing is super crazy weak. It became the first victim of a bear market by entering the bear market in January of this year, right there where I'm hovering. Then we had several opportunities to sell short where the arrows are. So notice this opportunity right there in February. You cannot see it if you have a line chart. So I'm gonna zoom in a little bit. You cannot see the trigger, you cannot see the signal because you have a line chart, because this line chart only shows a closing price. So it doesn't show high, low, or open. So if you want to have more control, you go to this setting and change it to candlesticks. And you can now see that, yes, indeed, on 10th of February, we had a touch of the red support resistance line and a close below it. Same goes right there in March and in early April of this year. Excellent opportunities to sell short. If you entered, congratulations. Now we're once again very close to lows. And notice for Russell 2000, it actually never even made it above the yellow line. And yellow line is super weak resistance, and it should have been able to overcome it, and it hasn't so far. Notice right there on 27th and 28th of June, we had a couple of touches of that area of the yellow line and never a close above it. Versus, let's say, NASDAQ, where we actually at least closed above it, and for S&P 500, where there was a significant push above this yellow support resistance line. So there is weakness for sure, and right now there just doesn't seem to be an end to this weakness. In fact, here's junk debt, high yield bonds. So before I go any further, we can look at let's say monthly charts. So this is monthly charts of junk debt, JNK. Down below here is a correlation coefficient, and this is correlation to S&P 500. By and large, they do the same thing, not always, but you know, if you look at a large enough time period, more or less they do the same thing. So if junk debt goes up, stocks go up, etc. And if junk debt goes down, then stocks go down as well. So looking at this chart, this is junk debt. Bear market started on January 18th. Notice it's the same date as Russell 2000. So these two were the first signals that something is completely wrong. And here's junk debt once again, completely collapsed without significant bounce. I mean, there were some somewhat strong bounces, especially right here in mid to late May. But notice that it actually tapped out even below this red line, meaning that it was not strong enough to even get to the point where longer term investors will just sell, and the aggressive traders would consider selling short. So not even that much. And notice how weak it is right now. A low was made on 13th of June. We almost made a new low yesterday, or day before rather, on 30th of June, and so close to new lows right now. So I think if we make a new low with junk debt, I think S&P will be next, and then we'll continue lower for the various stock indices. Looking at some of the commodities. So this week I wanted to point this out, since I have the paid newsletter. If you are interested in gold, gold and gold miners are in the paid newsletter right now. We'll see what's happening soon, and we'll see if some of the commodities will permanently move to the paid newsletter, or if you want me to continue covering gold, for example, in the general newsletter. If you have a preference, make a comment, and also please don't forget to hit the like button, and of course subscribe to this channel, and if you want to, repost, share this video. Let's continue. Looking at oil. So oil, until very recently, I was quite bullish, and you can see this upward facing arrows. These are actual alerts, successful, because notice we got nice target, you know, more than our target. So you notice here what I sent to my subscribers. Target achieved take some profits, move your stop to entry. You have a profitable trade. Congratulations. Several other opportunities here. Back in December of 2021. Excuse me. Going back as far as May of 2020, bullish opportunity. Now notice here, back in April of 2020, price briefly went to negative $40 for oil. So think about it. Somebody was paying somebody to hold their contract. So when we get to Bitcoin, I will once again remind you about this fact that indeed things can be negative, which is bizarre, but yes, it is true. So until very recently, oil was clearly in a downtrend, and I still think that, or rather, the current system thinks we should be buying. However, I am not very. I'm just not sure I wouldn't be buying now. I usually put purple arrows when I am very not sure or I'm not sending any alerts. So these are actual alerts that they were documented from my services, for my subscribers. But right this instant, I'm just not so certain about these things anymore. So a couple of reasons. We can look on weekly charts. So a weekly chart meaning that each candlestick is 1 week's worth of activity. So if you're looking on weekly charts and you have my indicators, click on settings where I'm hovering for the indicators and change this to 52. And it even says here daily charts use 250 and weekly use 52. Okay, it's not automatic. It's not going to update for you. So you need to manually change it. Now, looking at this chart, so we have this extremely bearish candle here on 7th of March. This is a weekly candlestick, so it's a week of 7th of March. It's very bearish because we have a tail, this shadow out of the top on top. It's a red candle, and it's at the very top of the range. So it's quite bearish. There's another very bearish candle right there on 13th of June. And right this instant, we are hovering just right around where we would be thinking about buying. However, I did not send any alerts recently because I just don't like this price action. I am reading candlesticks, and the way I'm reading candlesticks, I don't like them. I think we could continue lower. So let's go back now to daily charts and let's think where can we expect the price to continue to. So it's quite reasonable that we will continue lower and this level not hold. So we'll break below it and continue lower. If we get to 87, so red line is at 87, that's a bear market for oil. So short sellers, people who have longer term positions will probably just let go at that point. And price most likely will continue towards at least 73. So this is all despite the fact that we have aggressive war in Europe, and it is being done by Russia, which exports a huge amount of oil and gas to Europe. So there's a big problems there right this instant. Yet when I'm looking at the chart right now, I am not seeing strong presence of bulls or people who think the price will continue higher. So I'm looking, and this is really quite possible that the price will continue lower, and we're looking at possibly 20%, but maybe even more, like 30% move to the downside. So I think the Federal Reserve and actually most of the banks around the world have indeed succeeded in at least curtailing demand. So you cannot afford as much, so you have to pay less because they raise the interest rates, and the price itself is too high for many people to, let's say, drive. In America, it's a big deal. So the price is coming down, and eventually that balance once again will be found. But I just not so certain that we have bottomed here. So that's why I'm not really sending an alert. So I want to wait and see. Looking at a recent trade by Warren Buffett, looking at Occidental Petroleum. So again, I have no problem buying stocks. In fact, we were trading Occidental Petroleum going back to February of 2021, breakout right there. Opportunity to buy in April of 2021. Again, opportunity to buy in August of 2021. Huge run. Another opportunity to buy right there in September of 2021 rather, or December 2021, with an enormous run in our favor of well over 100%. Actually, even more. Let me see, it's like 150% run. So right now, the price did come down. There was a signal. So signal is if the price is in an uptrend, meaning that we have indeed closed above the blue support resistance line. And this is, notice, this is all I need to know really. Okay, so we're in an uptrend, let's say here back in May, and we're thinking, where would be a good price to buy? And we're like, okay, so this is a good price to buy right about around the blue line. So, and then I'm reading Warren Buffett actually bought total of 9.5 million shares on June 17 and June 22nd. So he bought on June 17 exactly at my indicator line right there, and then again on June 22nd. So actually he did exactly what the indicators lines are showing. This is exactly what Warren Buffett did. Is he correct? Will we see new highs for the security? And it depends on oil. So oil, I'm not so certain that we're going to continue higher. If we are indeed going to make a new high, then Warren Buffett is indeed correct. The way I'm reading it right now, I am not certain, and I have a sinking feeling, so to speak. So, I mean, I have no problem with oil dropping. I do drive, so I am using gas. So I am rooting for the price to drop. However, the price of oil is tied to oil companies. So if you are going to be trading oil companies, you might as well look at oil. It's important to know what oil is doing. And so we will find out very soon if Warren Buffett is indeed correct. Very briefly, natural gas. So same thing. Russia is a big exporter of natural gas to Europe and to other countries. And in the early phases of war, we were trading natural gas on the upside. Notice this huge run, an actual alert, March 22nd right there, very big run. So we had as much as 89% move in our favor. Then came this day right there, 14th of June, with a huge drop. Notice where we dropped towards this blue support resistance line. And then we dropped below it. I didn't send any alerts here. Now we actually dropped below into the red line, into the bear market. I would be selling it short right this instant. So let's see what happens once again. Despite the war, I think this is showing that Russia is becoming irrelevant. It's becoming sort of like a leprosy colony or some sort of a diseased body part. It just needs to be, left alone, and somehow, eventually, hopefully, it will cure itself. But right this instant, what I'm looking as far as the markets, various markets, Russian natural gas is having no effect on the price of natural gas. So this is showing that either supplies have been increased or demand has been curtailed, but more likely both. Very briefly on treasury bonds. So treasury bonds and treasury bond yield move in the opposite direction. This is 7 to 10 year treasury bond fund. It's still in a downtrend. Excellent opportunity to sell it short right there on 1st of March. Now we're attempting to rally towards the red support resistance line, and we would consider selling it short there again. Looking at the treasury bond note yield, it's basically the opposite of what I just showed. So treasury bond yield went pretty high here until 14th of June 2022 this year, I mean, if you can trade the bond yield, then you could have bought it right there, 4th of March, for a huge gain. I think we're still in the process of coming down. We can easily drop another 10%. I think 2.6% for the 10-year Treasury note yield is quite likely. But I think at that point, this would imply that Treasury bond funds have gotten to the red line right there for the IEF. So we would consider selling again, buying puts on IEF and TLT Treasury bonds. And finally, the security we all love to hate, it is Bitcoin. So again, I just showed you a fact that oil in fact did go negative, and this is oil futures, and we do have Bitcoin futures right there. So it is being traded by professional investors, obviously. Here's 30th of June low. It's basically a new low. So what I'm trying to say is, yes, Bitcoin is still $19,000. You know, it was much more expensive just a few months ago. And notice on this chart, once again, the actual alerts. And I had a question of how to sell Bitcoin short at retail level. So to do that, notice this security called BITO. So this is Bitcoin Strategy ETF. It is tied to the futures, okay, of Bitcoin. So it is independent of various exchanges. Now notice on this chart, my indicators didn't show up, and that's because there's not enough data yet. We need 250 data points to make a decision. But Bitcoin versus USD, we can trade already on various exchanges. Notice again downward facing arrows, with the last one producing, last trade the downside producing 61% gain, with a fall from 46 to 19,000. So looking at the same chart on a monthly chart. Okay, I'm gonna show it on a monthly chart right there. I already showed this chart in the past. I'm gonna show it again. So I'm gonna just make it into a line so people are not freaked out. So the red, rather the purple line is the price. So, and this is a monthly chart. So monthly. We had an opportunity back in August of 2021 to buy it, but then notice what happened right there between December of 2021 and January of 2022. We had an entry into a bear market for Bitcoin. How do I know it's in the bear market? So as long as this is a forex sort of instrument, it's not a stock. Basically, it's a commodity or forex. Once the stock, or rather, once the commodity closes above the blue line, we just buy. Once the commodity closes below the red line, we immediately sell short. So in this case, this is what happened. We would sell short right there in early January of this year. It would have been super correct. And if we go back now to candlesticks, I will show you that it provides actually useful information. So this is the candlestick chart, and I'm going to turn off my indicators for a second just to show you how other people think. So this is you can draw a line below these lows right there from May, June, and July of this year. Notice that last month, this is a monthly chart, these lows were broken with a close below it, a decisive close below that level. And so now we have this kind of, I don't know, you can call it whatever you want, but maybe this is a head where I'm hovering in October, November of 2021. This is a whatever shoulder, a left shoulder, and this is like a crooked right shoulder. And so we have a neck, shoulder line break. So this is like a head and shoulders kind of thing. And the head and shoulders kind of structure are extremely bearish. And if we take a measured move, so this is from the top to the bottom is about 50% move, we can say that we can easily see another 50% down from, you know, recent price levels. So like from this neck break, the 50% down would put us somewhere in the vicinity of $12,000. So it's reasonable to expect for Bitcoin to drop to at least 12,000, but it is also not impossible for Bitcoin to continue lower and eventually go negative. So just like I keep saying, there is a chance that we can see a Bitcoin in the negative territory because futures are traded. All right, head over to MasterChartsTrading.com, one word, MasterChartsTrading.com, click on sign up for one of the products. I have trading indicators, these lines on the chart. They will greatly simplify your trading experience. They are only $29.95 per month. I also have a newsletter. Like I said, we're going to cover all of these various stocks, and this week gold and gold miners are moving to the one of the paid newsletters. Let me know, do you like it? Do you not like it? Would you rather change something? But don't forget, in either case, to hit the like button. Likes is literally the fuel that keeps this channel going. So sign up for either trading indicators or the newsletter, or the best deal, of course, is to get both trading indicators and newsletters at $59.95 per month. I think it's a great deal because you also get to learn a lot about trading and about the way decisions are made in trading. If you need one-on-one help, sign up for the highest package, VIP access. You get one hour per month screen sharing session. That's at $259 per month. Again, if you have any questions, please let me know. Thank you again for watching. Don't forget to hit the like button and have another great trading week. Bye-bye.